Welcome back, dear traders. Let's discuss developments in the US stock market and forecast from our experts. Wall Street is trading in the red. In the middle of the trading week, there is a slim chance that major stock indexes will reverse upwards. What event pushed the market down? What could improve market sentiment? We will find out right now. On Tuesday, the US stocks tumbled with the high-tech sector printing the most losses. The Nasdaq lost 2.2% intraday, and the Dow Jones dropped 0.8%, and the S&P 500 shed 1.2% to close at 4,496 points. The pre-market does not give any hope for growth. The expected corridor for the index is seen between 4,440 and 4,520 points. Despite upbeat data released on Tuesday, the US stock market took a nosedive in light of the comments from some Fed policymakers who expressed hawkish rhetoric. Fed Governor Lael Brainard advocated for rate hikes and a rapid balance sheet tapering that could begin in May. It means that the central bank might sell off Treasuries and mortgage securities, thus scaling back its stimulus program. Mary Daly also stated that the Fed should focus on its fight against soaring inflation. The high-tech sector was hurt the worst because contraction of the Fed's balance sheet and QE tapering would make stocks more expensive, so that less risky assets would be more attractive. The minutes of the Fed's policy meeting could calm down investors or put them on edge. Besides, we should not neglect a new package of anti-Russian sanctions that the market should digest in the nearest days. The fifth package will be unveiled later today. Top US companies are due to report on their corporate earnings next week. Their reports will also serve as a market catalysts. While Wall Street is trading lower amid hawkish remarks from the Fed, the US dollar climbed to the strongest level in 2 years. Its index surged to 99.73 and then dipped to 99.60. These are the highest levels since May 2020. Traders were bullish about the US dollar in the American pre-market. Its index is expected to trade in the corridor between 99.20 and 99.90 today. Traders are betting on the greenback rate, anticipating the minutes that should confirm the Fed's hawkish rhetoric. The upbeat non-farm payrolls and the wage growth cemented expectations for a sharp rate hike. Another factor to strengthen the US currency is geopolitical tensions. The US dollar advanced across the boat as the West is ready to impose new sanctions on Moscow. The medium-term outlook for the greenback is bullish. The USD CAD pair slid to 1.2400 on Tuesday, the lowest level since November 2021. Then the currency pair rebounded to 1.25. It's likely to trade in the corridor between 1.2450 and 1.2600 today. In the USD CAD pair, the firm greenback is struggling against an oil rally. Today, these forces seem to be in equilibrium. The greenback might strengthen amid the Fed's minutes, but the loonie could also find support from data on oil inventories and a PMI. By and large, we can draw the following conclusion. Both the Bank of Canada and the United States Fed signaled a rate hike by 50 basis points at a time at the nearest meetings. Investors still have doubts about the Fed's move, but the Bank of Canada is widely expected to raise interest rates in April. The loonie maintains momentum because of the rise in oil prices. The scenario of using spare oil reserves has not put a lid on the oil rally yet. Oil and petroleum products account for 22% in Canada's exports, so the loonie outlook is optimistic. Bitcoin has again revealed its correlation with the stock market. Despite the positive pre-market, Bitcoin turned sour. The flagship crypto dropped 2.16% or 1,000 points to trade at $45,213 in the early American session. At the moment of recording this video, the digital token was trading below $45,000, and analysts believe that Bitcoin is making a downward retracement that will be followed by a new bullish wave at the end of the week. Experts projected a second test of $48,200. Meanwhile, the crypto is heading for $44,200, the lower border of the corridor. Bitcoin could rebound from this level. To sum it up, risky assets have come under pressure from Fed's governors and European policymakers. Investors want to play safer for the time being amid global risk aversion. Keep close tabs on financial markets on InstaForex TV channel. Subscribe to our channel and see you tomorrow.